It is worrisome to invest your money in a place where you are not sure of. Well, investing is a gamble we make. Sometimes we lose, sometimes we win. But there are strategies you can do to make sure your money is in a good place. Investing can be learned, you just have to do your research and listen to the people who are willing to help you. Luckily for you, Fortune Fastlaner, in this video, we will provide you a strategic way to invest your money in the right place. Question is, are the companies that appear on Glassdoor's best place to work worth investing in? Find out the answer by watching this video. Remember, while the first step is completing any of these amazing courses, the second and possibly more important step is taking action, even if it's imperfect action. After many years of outperforming the market, investing in the best places to work is still a wise decision. There was a minor setback this year, but with an estimate of strong growth and increasing company values, we can't look past the next few years' potential. Now, if you're new to this strategy, it's important to know that employees' effort ranges. The idea is that investing in companies with employees who are satisfied and show up on the Glassdoor Best Places to Work list means that these companies have the potential for long-term success. The low end of the work spectrum is barely sufficient to avoid being fired. On the high end, workers are energized and eager to come into the office every day. A company that can provide more hours for its employees should have better performance in comparison with one that cannot offer those hours. There is no sponsorship or affiliation with Glassdoor in this video. However, it was found that according to a variety of methods or ways of measuring how a company is, going back to the first year that Glassdoor published their list of the best places to work in 2009, they found what they say is a very good place to work. If you invested in the publicly traded companies that showed up on the list, you would outperform the market in general. You would even outperform the market on a risk-adjusted basis in 2020. Investing into the firms that appeared on the list would have created almost $16,500. In 2021, our mentor decided to invest around $10,000 into the strategy that invested $10,872. Your returns for investing in stocks can be maximized with some simple research and execution. By looking at the stocks that are currently trending, you may want to invest in these 10 companies that currently have a positive trend. We opened the account on Webull and they don't allow fractional shares. However, we wanted to invest a clean $1,000 into each stock. Google was also on our list of stocks to buy and their stock was around $1,700. Last year, we reported the account value to be around $14,000, but now it is up by 35%. Today, the account has reached a value of over $14,700. Compared to what the stock market's performance has been over the past years, ours surpasses its growth of only 28% and outperforms in a very competitive arena. This year, the strategy outperformed other stocks, but only by a small margin. One of the reasons that it was not as successful as expected was the high amount of risk it took on. This can be seen when looking at risk-adjusted metrics and especially at stocks which are poorly performing. A year ago, DocuSign was extremely successful. In November of 2021, it performed 50% better than the S&P 500 index, which had been doing well at the time. 1 week prior to the December 3 show, DocuSign plummeted over 40%. In a single day in December, that company caused losses for other companies similar to how one gunshot can cause damage throughout an entire city. Our mentor felt that our proposal's numbers would only increase if we had known what to do before the end of November. We were able to make a 50% return on our assets this year, and in light of this, we wished it was clear to us sooner. We weren't sure whether to sell out or not before the end of December because it wasn't obvious which one we should do. If someone planned ahead and waited until 2020, they could have seen an even greater return than the 15% they got by consistently following the plan of buying and holding until 2020. And with a strategy that is based on share price, we partnered with a higher risk but potentially high reward. However, you should know that when we sent out the currency, there were several problems. For instance, one was related to blue lob stinks, and that problem was due to the strategy of buying shares with a high price. Our mentors share their experience with Portfolio Visualizer, a fantastic website that doesn't provide information on the month-to-month variation. Glassdoor includes their list in mid-January, meaning that every year they miss a few weeks between the end of the year and mid-January. Now, historically, this hasn't made too much of a change. From January 12, 2021 to January 22, 2022, the profits from the count were only 28%. In the first 2 weeks of this year, stocks in general had a down performance, and because of this, our portfolio was down another 7%. Over the time period of December 31 to January 12, there's been a total depreciation in stocks. Although returns were respectable when compared to some of the other indexes, it nevertheless lagged behind the S&P 500, which was up 23%. HubSpot was going to cost us a lot this year. At the end of the last December, it was up 62%. But that changed by January 12, where it only went up 31%. And for 2022, we plan to maintain our previous account and roll the yearly investment over into the new list. Running this account presents a problem, which is when the list comes out on an annual basis. Investing is difficult because of the tax implications. If you sell after a 2-day wait, you'll pay long-term capital gain taxes. But if you sell now and invest in other ventures, you could make money and also pay short-term capital gains this year. The cost of modifying the deed with DocuSign for something that's only worth $100 will offset the possible profits from this deal. One way to avoid capital gains tax is to postpone the sale of an asset until its value has increased. But with new technologies, we have the option to wait a little while and pay a long-term capital gains tax. We are going to trade before the new tax deadline, even though it is a few days early and the government doesn't charge additional taxes. A list from Glassdoor last year had the same exact company on it this year. Still, if they show signs of underperformance, we are going to go ahead and sell our stocks. Here's our new list for 2022 and which stocks each mentor will be selling. Our mentors sold the 5 stocks that dropped out of the top 10 and used those proceeds to, as best he could, equally weigh them into the 5 new names. This is not a strategy we would recommend and consider for our majority of businesses. However, we only use this to approach when starting with a small portfolio. We expect that in 1 year, the name could become even bigger than DocuSign did in 2021. Now, if you are wondering what are the best places to work in Glassdoor's lists, continue watching this video. Businesses have begun to see an influx in workplace-related requests from employees. Professionals are demanding more, such as better pay, flexibility outside the workplace, a healthier work environment, and benefits to support them during their off time. With the support they need, employees are able to stay with their companies. This can be seen in the Great Resignation, where many employees quit their job at the same time, but some of these firms continue to shine, even if there was such commotion. The workers thought so too. Glassdoor has compiled a list of 100 best places to work in 2022. With many technology companies making the list, thanks to flexible work environments, consistent support during the pandemic, and focus on better pay, benefits, and work-life balance. Technological companies dominate the list. 5 of the top 10 employers from 2006 made Glassdoor's top 10 list for 2022. Now, for Glassdoor's best place to work, here are the top 10 United States large companies for 2022. Number 1 on the list is NVIDIA. The second spot is HubSpot. Bain & Company on the third spot. Number 4 is eXp Realty. And to join the top 5 is Box. On the 6th spot, they have Boston Consulting Group. 7th on the list is Google. 8. Veterans United Home Loans. Number 9, Lululemon, and lastly, number 10, Salesforce. If you follow this strategy, make sure to subscribe so that you'll receive our next video update. Let us know your thoughts about this video in the comments section below. And that's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!